here to break down the impact of the Fed's surprisingly large interest rate cut on everything from your credit cards to your mortgages, even your car loans. We'll do that right after this. And welcome back. This morning on Today's Consumer, we're going to focus on that much anticipated news from the Federal Reserve cutting its key interest rate by 0.5 point.
And that means it's getting less expensive for consumers to borrow money. Let's get a closer look at the impact on our wallets. We've got NBC's Vicky Nguyen.
Hi.
Vicky, let's start with the housing market. So how is it going to affect you?
Okay, here's the thing. We waited for a very long time. Good things finally came to those who wait, but the rates fall so much slower than they go up. So zooming out, let's look at the 30-year fixed rate right now, 6.15%. So what the Fed does, it's a benchmark rate. It doesn't directly set mortgage rates, but it does have a major influence. But look at what's happened since 2021, the same time, September. Rates were 3%. The next year, they jumped to 6%, doubled. So last year in October, by the way, it was 8%. We were kissing 8%. So now at 6%, that's helpful. Everyone was anticipating this rate cut, but Fannie Mae and Freddie Mac, the two financial institutions, are predicting that by the end of next year, we'll be down to 5.7%. That doesn't sound like amazing, but the Fed chair has said he doesn't think we're going to see 3% ever again. So if you are in the market for a house, here's what you should be doing right now. Number one, making sure you do everything to improve your credit score. That means paying down high interest loans, making sure you're not opening any new credit cards, getting all your financial paperwork in order. Also, hiring a really experienced real estate agent who knows the market, because guess what? The inventory is still low. So competition is going to be fierce. You want to make sure when you make an offer, you are as competitive as you can be.
Got it. So that's if you're looking to buy a house. What about, let's say you got locked in at one of those interest rates when it was north of 6%. Is this the time to refi, or the Fed meets again in a few months?
That's right.
They're expected to perhaps cut rates again. Should you wait?
So the experts say it's so tempting to try and refinance right now, but you're absolutely right. The Fed will meet again in November after the election, and in December. They're projecting another 0.5 point cut. So if you can wait even into early next year, they say go ahead and wait. Because here's the thing, refinancing isn't free, right? So here's what you want to think about. Number one, would you refinance to a new rate that's 1 to 2% lower than what you're paying? Okay, maybe think about it. Refinancing costs 2 to 6% of the new loan amount. Sure, the lender's going to say, well, roll it into your monthly payments. You don't have to pay it all up front. But you got to do the math. Look at the monthly payment and see, now you're extending your loan longer. Will the savings outweigh the costs?
All right, let's talk car loans. I know a lot of people are in the market for a car. So what should we be doing this weekend? Should we be shopping for cars, or should we wait?
Just last week we were talking about how car prices are falling. That is great news. The average price for a new car, $47,000, but the median price is much lower depending on what kind of car you're shopping for. A used car average price, $27,000. So that's fantastic. Incentives are back. Inventory is back. The loan rates won't fall as quickly, because it takes a little bit of time for all this to trickle down. The average rate for a new car loan right now, 7%, according to Edmunds, 11% for a used car. But here's the thing. You don't have to accept the loan that's offered to you at the dealership. Go to your bank, go to your credit union, and if you are a veteran, USAA has new car loans starting at 4.49%, the low rate. So if you have excellent credit, you could get an even better rate.
Do you usually get a better rate at a bank versus at the dealership? Is that generally the case?
It's going to depend on the car that you're shopping for and what kind of incentives that dealer is offering. And if you have excellent credit, some dealers are offering rates as low as 0 to 2%.
Credit card debt. Over the last few years, Americans have racked up nearly $1 trillion in credit card debt. What does the Fed's decision yesterday mean for folks trying to pay down their balance?
Eventually, it's going to be great news, but we have seen credit card interest rates hit record highs over the last couple of years. Right now, they're sitting around 23% for a new credit card. This is according to Wallet Hub, 21% for an existing credit card. Think about it. That means if you spend $100 and you don't pay it off right away, you owe $123. That's financial quicksand. Don't get into credit card debt in the first place, but if you are, pay off your high interest cards first. That is number one. Here's what can help you. Transferring all of that debt to a new credit card. For a year, a lot of credit cards will offer you 0% interest. If you can't get one of those deals, go to the bank and ask for a personal loan. A lot of times those interest rates are much lower. You use that personal loan, you pay off all your credit card debt, and then you chip away at that personal loan. But it's so important. Who wants to pay 23% interest? Nobody. And then my favorite tip, always negotiate. Here's the thing. You don't
love
think
to haggle.
Vicky
loves to haggle.
I grew up haggling.
I bet the car dealers hate to see you walk in.
I bought all the cars for my family, and it's fantastic. I do it all over the internet. That's a whole nother segment. But here's the thing. You call up your credit card number, that 800 number on the back, and you say, hey, listen, can you please give me a lower interest rate? And you know what? It works 76% of the time. LendingTree did a study.
Wow.
They said, when you ask, you shall receive.
By the way, if you hold a phone like this, we know how old we are. If you hold it like
okay, fine. Hold it like this, or like in my AirPods in.
Yeah, all right. Just, is there anything we should keep in mind?
Okay, we
for
talk
now?
about
Yeah.
the credit card debt and what a financial like sand trap that really is. But I also think we're going into the holidays, and as many great deals as you're going to see, don't overspend for the holidays. Don't put it all on your credit card. There is nothing like being debt free. That is the best gift of all. Save more than you spend. That makes you just more competitive in all of the other things, the big good debt that you want, like housing debt or car debt, right? Student loans.
Vicky Nguyen.
We love Vicky.
Always brings the goods.
Love Vicky.
Always brings the
All
goods.
right.
Thank you, Vic. Dylan Dreyer always brings